Hello, traders. Good morning, good afternoon, good evening, depending on where you are. I want to say thank you for your support on this channel, for your likes, your subscription, your support generally. The last time we dropped a video on this channel, we discussed why 95% of forex traders fail in this industry. Because it's massive, a whole 95%, even more than 95%, yes, of forex traders fail, especially new. We have picked one of the reasons why 95% of forex traders, even more, fail in this industry. And the reason is not being able to choose the best strategy that fits your personality, that fits the kind of person that you are, that fits you. Okay, let's come to look at it. There are different kinds of strategies that you use in forex trading. We have scalping. Scalping is for those, you just enter the market now, you want to trade for 5 minutes, 10 minutes, 15 minutes, hold trade for 15 minutes, maximum 1 hour, you're out of the market. There are some people by their nature, once they get into the market, they take a trade and they see that, they are in profit. They will start shaking. I'm in profit, I'm in profit, I'm in profit. Let me take my profit. They quickly take their profit. They don't have that patience to wait for the market to run for a day, for 2 days, a week, a month. They don't have it. It is not because they don't know how to trade, or it's not because they are not going to succeed, but it's because of the personality, the kind of person they are, the way God created them. Then there are others, some others who can take trade in the morning. They can allow the trade to run, for a day or some hours, like 2 hours, 3 hours, 4 hours, 6 hours, throughout a day. Even sometimes almost 24 hours, or even a little bit more than 24 hours. Those categories of persons, they fit into what we call day trading. They are day traders because they open their trade and close it within that day. So they have that patience level to wait for the trade to run for hours before they close it. But their patience will not allow them to wait for their particular trade, to run for 2 days, 3 days, 4 days, 1 week, 1 month. So those categories are day traders. Then we have another style of trading, which is swing trading. These traders can hold trade for more than a day. In fact, they enjoy holding trade for more than a day. They don't like taking trade and be watching the trade, be watching the chart. They just want to take their trade, close the computer, and go and do whatever work that they have to do. Yes, they enjoy it. It is not because of any other thing, but because they enjoy it, because that is what they want to do. They don't like panicking. They just take their trade, they close the computer, they come back in the evening time, maybe once or twice a day, morning and evening, they check the position, they close the computer and let it run. It runs for a week, 2 weeks, 3 weeks, 4 weeks, 1 month, 2 months, 3 months. They are swing traders. In between day trader and swing traders, you have what we call short run or short term swing traders. Those are they can hold trades for more than a day, but sometimes less than 5 days. Yes, they mostly use the daily time frame to trade. So they are not really day traders, and they are not the typical medium term swing traders, but they fall between. They are short term swing traders. We have people like that. It is so because the personality that they have, their own kind of personality, suit that particular style of trading. Then we have the big boys, which are position traders, investors. They take their trade based on fundamental analysis. They look at the economy, they look at geopolitical system, geopolitical happenings. They look at all the parameters that can affect the market. Then they take their position. 1 month, 2 months, 3 months, 1 year, 2 years, 3 years, that particular single trade is still running. People like Warren Buffett, for example, they take a position and they leave it there because they have done the analysis. They know what is going to happen, at least to some extent. You know, trading is all about probability. But with study, knowledge, and experience, be able to analyze the market and say, okay, yes, I'm taking this position. That is how position traders trade. They trade basically using fundamental analysis and the sentiment. So these are the kinds of styles of trading, styles and strategies, of trading that we have. Now, the question that most newbies are asking, ask all the time is, which of these trading styles is best, is more profitable, is the one I should learn? Now, there is a little trick there. The number one thing that new traders should know and realize is that they are not the one that will actually decide on the one that they want. The number one decider is their nature, the kind of persons that they are, the personality that you are is what will determine the type of trading style that you are best suited for. Personally, I cannot be a scalper. I cannot take trade and be watching the chart 5 minutes, 10 minutes, 20 minutes, be panicking. No, I can't do that. That is hypertensive. There are lots of people that cannot do that as well. So those group of people cannot be scalpers. Day traders, they can take trade and have some patience, let it run for some hours. But by the time it's going above a day, they become impatient. It is not what you decide to choose, it is your nature. So for you to be successful in this field, you have to choose a style of trading that is best suited for the kind of person that you are. So that's the trick. When you start trading and you do not take this decision on time, you are going to see that you are going to struggle for a very long time. Because the issue is, today you scalp, tomorrow you do day trading, and next year you do swing trading. Another time again you could come back to swing trading. Even me personally, when I was learning, because we didn't have people, we didn't have mentors. As at that time, as at 2009, 2010, 2011, we didn't really have mentors because a lot of people did not know much about forex traders at that time. We were jumping from one style to another, and we learned the hard way. So new traders, it is not what you really want to choose, it is your personality. And I will advise us that before you settle down for any style of trading, you need to first of all go back to the internet. Go and take a survey on your personality type. If you take a survey, just type it there. Best personality test on best trading style for me, or on best trading strategy for me. You will see that the survey will come. There is one on baby pips. There's a survey on baby pips. In fact, we have it all over the internet. Just take like 2. Then by the time, answer the questions honestly, because computer is what you give that you get. If you give the wrong answers, you are going to get the wrong response. So when they ask you all those questions in the survey, just Just honestly answer the questions, and the survey will advise you on the kind of trading that you should do. Whether you should be a scalper, whether you should be a day trader, whether swing trading is best suited for you, or position trading is best suited for you. So by the time you finish taking all these personality tests and you know which style is best suited for you, then you now come down to the choice of time frame. These different kinds of traders, they have different kinds of time frames that are suited for them. That's another trick that new traders should know. You must issue of time frame, choice of time frame. You must sort it out at the beginning of your trading career. If not, you are going to have a hard time being consistently profitable in this field. For scalpers, you know, when you are doing trading, your trading should be multiple time frame analysis. And meaning that you have to choose 3 time frames for your analysis, entering, and trading. As a scalper, the 3 best time frames for you would be the 1 hour time frame, 15 minutes time frame, and 5 minutes time frame. Those are the time frames that are important to you. But that does not mean you should not look at the higher time frame for you to know the overall flow of the ocean. Because if you don't know the overall flow of the ocean, where the ocean is flowing to, you might take a trade. 1 minute, 2 minutes is enough for the market to wipe you out. So still looking at the monthly, weekly, daily is important for you to know where the market is flowing to overall, so that you're not going to be trading against the market. But the time frames that are important to you as a scalper, they are 1 hour, 15 minutes, and 5 minutes time frame. Then for day traders, 3 time frames that are of importance to you: daily time frame, 4 hour time frame, 1 hour time frame. Then you use 15 minutes time frame for refining. These are the time frames that are important for you. On daily time frame, you do your analysis. On the 4 hour, daily and 4 hour time frame, you use to do your analysis. The 1 hour or 15 minutes, you use it to take your entry. You get your entry signal. It's as simple as that. Then for those that are swing traders, you analyze the monthly time frame for your direction, the weekly time frame for your structure, then you use the 4 hour time frame to take your entry signal. It's as simple as that. So if you are a swing trader, if your personality shows that you are a swing trader and you want to learn how to swing trade, go to the monthly time frame to determine your direction. In the next class, we are going to take a topic on how to determine the correct direction of the market. You remember in our last video, one of the 5 reasons why new traders fail is because it is difficult for them to determine the correct direction of the market. So we are going to dedicate one whole video to determine the correct direction of the market using the monthly, weekly time frames. So back to swing traders. So swing traders, they analyze, look for the direction on the monthly time frame. They look for direction on the monthly time frame, use the weekly time frame to support the monthly time frame, then they take their signal from the 4 hour time frame. Then position traders, which that one is a bit outside the scope of, because it's only people that really have much money that actually do position trading. So we may not need to really speak much about that anyway. So these are the ways you choose your time frames. This issue of time frames, proper choice of time frame, and match it with the kind of personality you are, will help you to be consistent in trading. This is one of the areas people usually go wrong. Do not do scalping today. Next week, you are doing day trading. The other week that is coming, you are doing swing trading. If you do that, your road to consistent profitability is going to be very, very rough. In fact, you are going to join the 95% of traders that struggle for a long time. So the reason I'm doing this video is for you, whether you are a new trader, you You have been in the market, you have been trying, struggling. 1 year, 2 years, 3 years, 4 years, 5 years. You don't know what the problem is. This is one of the problems. You are not able to, you don't understand your personality. Go and take personality test. Choose your time frame wisely, as I have advised you. And then monitor the whole thing. Monitor it. Follow it religiously. Then you will see that you will start becoming profitable. So guys, thank you so much for listening. Don't forget to like and subscribe.